Hello and welcome to this ET Now special. My guest today is one of India's finest CEOs and a darling of the stock markets given the wealth that he's created for investors. Aditya Puri, always a pleasure chatting with you. Thank you for talking to ET Now. You're doing a fine job of running HDFC Bank, so I don't have too many questions on HDFC Bank. Let's first talk about the elephant in the room, the NPA crisis. And a series of steps have been taken by the government and the RBI over the last fortnight or so to fix the problem. Structurally, do you believe this is enough to fix the problem?
I think so. I think the way they've gone about it is quite systematic. If you see the issues that had come about, is one thing you have to recognize about NPAs, the longer they remain, the tougher they are to resolve. That is one part. The other issue was if there is any haircut needed, who will take the decision, because then you could have repercussions. The third is whether all bankers agreed with it. The fourth is, did we have the appropriate legal mechanism? Five is, if any prodding was needed, who was supposed to give it? So I think between the oversight committee, between the NPA ordinance, between the powers to the RBI and the Bankruptcy Act, I think there's the best chance we have of resolving it. What it does is it puts a time frame. So you don't resolve it, then RBI comes in, you still can't resolve it, you go to the bankruptcy court, you can't resolve it and come out with a Chapter 11 kind of decision there, then it goes into liquidation.
Now, bulk of the bad loans are concentrated around 40 to 50 companies. Do you think the system will have to opt for some sort of radical haircut? And with this ordinance now, is there enough comfort for banks to take that haircut?
I think, let me step back a bit. So if you look at it, haircut is a given, because these are NPAs not of today, these are long-standing NPAs, and the longer you don't resolve the NPA, the bigger the haircut. So is there going to be a haircut? Definitely. But there is economic value there as well. So the difference between the economic value that exists and the value that is there in the books will obviously have to be taken as a hit. And there is no way out. So this is the best possible mechanism, as I said previously, whereby you professionally move and take whatever is necessary, put it behind you and go ahead.
Now, the overall bad loans in the system adds up to what, about 9 lakh crore rupees every day. The number keeps getting even more alarming. Realistically, how much of this do you think can get fixed in the next 1 year? You spoke about time frame. What is your own assessment? How much could get fixed in the next 1 year or so?
See, firstly, I don't understand this bad loan figure. NPA doesn't mean the loan is bad. Second is that total figure does not take into account the security the banks hold, as well as the provisioning.
Sure.
The Indian banking system on an average has a security cover of around 60%. A provisioning cover of about 60%. And they have good security. So that 9 lakh figure would probably
look a lot smaller.
would be a lot smaller. Then you have NPAs of two types, and I think you alluded to that. One is the NPA that has been there for a period of time, and one is an NPA created by circumstances where the GDP is now lower than what it was expected to be. Those can be resolved, and I think those will be resolved within the next 1 year or so.
Now, AM Naik spoke to ET Now the day this ordinance was passed, and he said that he believes only 1/3 of these so-called NPAs are likely to be resolved. Are you as sort of pessimistic, or do you think more bad loans could turn?
I won't comment on what Mr. Naik said, but as I said, that if you look at it, there are loans which a large portion of these loans can be resolved, which have not been chronic, and so if you resolve a loan in the early stages, it can be resolved. I would think that is an overly pessimistic assessment.
Sure. The other aspect of this new NPA ordinance is the role of the central bank, the regulator giving directives to banks in certain situations, like you pointed out, in specific cases. Do you think that's a desirable situation, or do you think commercial decisions should be best left to banks? Because that's been one of the criticism of this ordinance.
Commercial decisions should be best left to bank if they take the decisions. The problem has been that those decisions have not been taken for a variety, and I'm not trying to criticize anybody. For a variety of reasons, those decisions have not been taken. Whether it's the quantum of the haircut, whether who will be held accountable, whether banks all agree. And I think in these circumstances, RBI giving a bit of a nudge on a professional basis is very welcome.
Sure. We all know what got us here, and that's why I don't want to waste time talking about the legacy issues that led to this situation in the first place. Don't want to do a blame game. But on hindsight, Do you believe that banks have been soft on large corporates? I know the media obsesses with one case, which is a Vijay Mallya episode, but there are a whole host of large corporates, large conglomerates, and one gets the feeling that they've gotten away too easily. Would you agree with that assessment? And this is for the banking system as a whole. I'm not talking about HDFC Bank.
You must recognize that I do not have too much expertise on the subject. So
I'm saying you don't have too much of exposure to the problem, but yes.
And wherever we have found that we have to take hard decisions, we've taken it and we've let the promoter know our views. For the rest of the banking system, I think it's better if you get a comment from somebody more acquainted with it.
Okay, you're sort of playing it with a straight bat. But I'm going to try my luck with another question, which is the RBI has now asked banks to report divergence in sort of NPA recognition. And we've seen a large private lender having had to report a significant divergence in NPA recognition. Is that a problem that you're worried about? Because this also raises questions on credibility of private banks and whether we are masking some of the NPA problems at a global level, like people expect Chinese banks to do. Is that a serious concern according to you for the system as a whole?
Two parts. There could be a timing concern. There cannot be any other concern. So the issue is the following. For instance, just to make it clear, we did not have a divergence. So largely you would agree. There is a logistical stroke timing issue, which is technical in the sense that the RBI inspection will happen after your accounts have been published or thereabouts. And at that point of time, there could be genuine differences. Mm-hmm. So should there be a divergence between the central bank and the bank? No. Only point is whether you should go backwards or resolve it in the quarter that you get the RBI report. And my view is you should resolve it in the quarter that you get it. Mm-hmm. Going back, unless it's something that genuinely there was no kind of difference of opinion, it's something that you should have done and you didn't do, well, then you should be hit for it. But otherwise, if there's a genuine difference of opinion, the regulator still prevails. And going backwards, I think we need to find a better solution.
Sure. Last word on NPA. So would it be fair to say that you believe the worst is behind us as far as the NPA problem for the economy as a whole is concerned? Because that's been the big drag, the one reason why investment cycle hasn't turned, we aren't growing as well as we could. Is the worst behind us?
The worst is behind us.
For the system as a whole?
Yes.
All right. Moving away from NPAs, and this is sort of a topical issue, and there's been criticism that's come in from the chief economic advisor that banks sort of bend backwards to please the regulator and and the finance ministry, and there isn't enough constructive criticism, whether it's of monetary policy or of fiscal policy. What would you say to that?
I haven't seen what you said, so without referring to what you said, let me say I am not scared of anybody. I will express my professional opinion, and let me express it so that it's very clear. I think the RBI has done a good job in managing the interest rate scenario, recognizing the conflict between inflation and growth. I think they've done a good job. I think they've done a good job in managing the foreign exchange in a volatile global environment. I don't see any necessity to criticize them on the subject. Sometimes a lot of criticism comes in because I think this transmission, we keep saying it, the media doesn't want to recognize it, we keep saying it, that there is not a one-to-one correlation that if the RBI reduces the repo rate today, I can reduce it tomorrow. It doesn't work that way. That's an indication. The MCLR mechanism, which is a professional mechanism recognized in educational institutes as well as all over the world, is that when my deposit rates come down, I am obligated to bring down my base lending rate. And I think that works. And so if you expect instant transmission, that's not going to be there. Transmission over the longer run will be there, and nor is it going to be one-to-one because we have SLR, CRR, etc. and the market where demand and supply for money to take care of. And they are competing organizations like now in this new world. So there's the mutual fund, there's small savings, etc., etc. So I think the transmission can take a little longer. That said, I think on demonetization and the money that came in, the banks went out of their way to reduce rates disproportionately because we didn't know how much of the money would remain. Sure. So I hope I've clarified the issue.
Yeah, but
I can assure you I'm not scared of anyone because I'm not looking for anything.
Yeah, sure. But to quote the chief economic advisor, he says bankers are worried not to get in the wrong side of the government or the RBI because they worry about losing access. Is that true? And I just want to ask
He's not talking about me. I have never worried about access. I have not had a problem with access, and I can tell you that for this government as a whole. You go in with a valid point that you need to discuss, you will get access. So, are you implying that specialized access on a side basis? I think neither the government wants it, nor are we looking for it. But access where it's necessary in the interests of the country or the banking system is available.
Yeah, but so just one last point, which is the reason I think the media also has this perception that corporates are a little sort of scared to criticize the government and the RBI. And if the chief economic advisor also thinks so, I think that's the reason I'm asking this question. Is there this sort of fear that, that people need to be conscious of how they, criticize the government or the central bank? And is there enough constructive criticism that you see in the economy?
I am not aware of such fear, at least I am not scared. So the rest, whoever feels this, I think you better interview them as to...
Sure, fair enough. Now that corporate India has a license to criticize as given by the central chief economic advisor, tell us, is the tight monetary policy here to stay for a while? I mean, where are the rates headed, and do you think now there's a case for, I know you don't usually comment on monetary policy and prime.
No, after the fact, I'm not commenting on policy, but the situation I'm happy to comment on.
So where do you think
firstly, where is the tight monetary policy?
The
system is surplus by 3 lakh crores.
Sure.
There's excess liquidity. Where's the tight monetary policy?
But shouldn't the central bank move its stance from being neutral to accommodative?
Why?
To send a signal, because inflation is now very much
under control. The signal is there. So neutral doesn't mean that he's saying that all he had said last time is I have to watch the CPI and the WPI as to where it's going.
So do you see scope for rates to come down?
Depends on how inflation goes. I see scope for it to come down. I see scope for it to go up.
But given where inflation is right now,
if inflation is where it is right now, but if demand picks up substantially, you could see, and the liquidity in the market disappears, you could see a marginal pressure. But either way, just to put everything at rest, I don't see more than a 25 basis points either way. So is that earth-shaking? The answer is no.
So which brings me to the question on how industry sort of keeps on blaming the system for slowdown in investments, saying that rates haven't come down enough. Is that criticism valid at all, you think?
I think the industry has been saying this for a while, and we bankers have been saying, if your project is going to be, either you're going to go in for a project or not going because of a 1% difference in interest rate, I think you need to examine your project appraisal again.
Let's talk about 3 years of this government, because the government is completing 3 years in about a week or 10 days from now. And the markets are at an all-time high, almost as if it's symbolic of what's happened over the last 3 years. But Mr. Puri, tell me, do you think that the euphoria is backed by fundamentals? Now,
normally euphoria should be backed by fundamentals, but let me give you my view as to what I see has happened in the last 3 years. So if you see, we have a very clear, the government has a very clear fiscal policy in terms of the fiscal deficit, the composition of expenditure between capital and revenue, the allocation to the states, wanting to expand the tax net so that they can get leeway to spend. So whether it's the GST or it is demonetization, coming up with the NPA and the bankruptcy code so that there is speedy resolution, I think is a very good policy.
One could argue that our macros haven't been tested. It can't be too tough to manage your twin deficits when crude is at $50 a barrel. I mean, 3 years back, 4 years back, it was at $130, $140 a barrel.
Good man, I like you.
So it can't be too tough to
manage.
Are you
saying deficits? It's not tested? 2 droughts don't test it. Global slowdown doesn't test it.
But global slowdown has been there for a while.
No, global slowdown has been a while, but 3 years also, 3 years of a global slowdown and 2 droughts. As per our local economists, the drop in oil prices compared to this, there's a 25 basis point negative impact. So it has been tested. Now, let me go forward. If you see globally today, you're talking about population reducing, you're talking about deleveraging, you're talking about deglobalization. In that environment, India is actually very well positioned. And because of that, you have the euphoria. Nobody puts, I mean, don't think the FIIs or the FDIs or the market sab janta hai. It may be a timing difference, but they all know. So euphoria doesn't come. There can be ups and downs. But I haven't seen a report that doesn't say, given the current global environment and the policies in place, India doesn't have a bright future.
Right. So you spoke, I want to talk about demonetization because you were one of the few who openly came out in support of this policy when a lot of your peers were sort of not sure what impact it would have. But tell me, Mr. Puri, do you think the 6 months after the rollout of this policy, has it achieved what it set out to achieve? The core objectives with which this policy was introduced, has it achieved what it set out to achieve in your view?
I think it's achieved a lot. I haven't examined it vis-a-vis the core objectives, but let me go through what I think it has achieved. Very definitely, it's brought more money into the system. It's brought down interest rates. It will definitely widen the tax net by the time that income tax people are finished with all the people who deposited money, which is really not white money. That will come back, and so it will widen the tax net. It has led to a great push on digitization, which will help in financial inclusion, which will help in transparency, which will help in, I was with McKinsey yesterday, which will help in bringing down corruption, because that's the only way when you really digitize the application process, the response process, the payment process, the healthcare. So I think overall, I think the fears in terms of, including yours, in terms of a tremendous decline in GDP have not been there. Let's push it aside. Yes, did some people suffer? There's no gainsaying that. But net, do I think it was positive? I think so.
Yeah, let me quote Kaushik Basu, former chief economic advisor, one of the finest economists, who says we've lost 1.5% of GDP growth due to demonetization. We could have grown at 8.5%.
Well, if Mr. Basu can get us to grow an 8.5% without demonetization, I'll make him king of India. So can we state it on facts? I don't think we were moving towards 8.5%. And that brings me to the point that 7 to 8% is very good growth in today's global environment, the way it's going. If we reach 8.5%, it would be a miracle, which I hope for. If we get everything right, we could hit it. But I don't think demonetization has been the cause of our long-term prospects being hit.
Sure.
Economic advisor, only you're keeping on quoting.
They're the only ones who are making provocative statements.
Yeah.
On the core issue of job creation, Mr. Puri, because that's been a concern, one of the promises on which this government came to power to create jobs. And that has been a challenge because of the environment we are in, because of the slowdown in manufacturing. If you see the new jobs created vis-a-vis what it was in, say, 2012, 2011, the trend is visibly sort of sharply lower. And it could also be a function of the global environment that we are in. How big a concern is that? And now we're obviously seeing more layoffs in sectors like IT and manufacturing. How worried are you on account of that?
I think that's a cause of worry. Everybody should be worried, so am I, because we've got the demographic dividend coming our way, and if we handle it right, and that's one of the issues, if we handle it right, then we will buck the global trend of depopulation. Mm-hmm. And whenever you have population, then you create demand, you can manufacture, etc. Have we done enough, and have we tried? Yes. Have the circumstances, when you have technology changing, when you have technology in large corporates. But if the strategy on health, rural employment, microfinance, sustainability, infrastructure, food processing works out, which they're working very hard on, I think we have more than a reasonable chance of success. But is it a cause of concern which requires tremendous effort? The answer would have to be yes.
Mm-hmm. To look at it differently, IT sector, for example, I want to talk specifically about IT sector because it's in the news on account of the recent layoffs that multiple companies have sort of had to undertake. Now, it's been one of the biggest drivers of the Indian consumption story, the in terms of spending and borrowing to buy homes and cars and whatnot. And it's this EMI bracket, so to say, that is now being hit hard. And a lot of the growth in the retail side for banks like yours has also been driven by this sort of, burgeoning middle class, so to say, these IT professionals who sort of get, high salaries and who've been taking loans and all that. And a lot of them now getting retrenched or, them being laid off and, with not easy jobs available to get as well. Is that a concern? Is that a social concern as well? Are we staring at a crisis in terms of defaults, in terms of borrowing, lower borrowing? Are job losses going to be the next big sort of, crisis that we're staring at?
Firstly, you like the tech guys, I think, are giving too much importance to technology. So what are the total job losses we are talking about?
But
we are a country of a little over 1 billion.
Sure.
So what are the total job losses?
I agree, but symbolically, when every company is, it would be 20,000. Say 20,000, 25,000. Yes. But symbolically,
won't even sniff about it in the morning. But while we were talking about Make in India, I covered it for you, that now these may not be the new job creators. They will not be. But I was talking to Rajesh from TCS also day before. what we are having to move from a direct linear correlation between number of people employed and the revenue is we will have to move up the value chain, which is necessary in all organizations. It's happening in financial services, it will happen there. But whereas IT did define us, it did create a brand, but if you're saying they were a major component of either GDP or employment, I disagree with that. So that cannot be the crisis. That said, the issue, yes, is that you are getting growth as of now without too much job creation. And that is a cause of concern. And I think they're working very hard trying to get the small scale industry is going, trying to get, you take for instance us, we are looking at having 10 million women, family, self-sustaining a family, that's 40 million people. Now that's, and I think the scope for sustainable livelihood could go up to 200 million people if a lot of people concentrated on it. That's a lot of jobs. So there are jobs in the semi-urban and rural area. There they are being created. There are some jobs which are being lost. But then you look at all the emphasis on small scale, etc. And as you bring the roads, power, electricity to semi-urban and rural and change the supply chain, I think it's a cause for concern. It's not a cause for alarm. And we all have to work very hard.
What about the impact of automation on jobs in the banking sector? HDFC Bank has a humanoid to help customers with banking transactions.
Yes.
You've made sort of rapid strides with things like this. But at a broader level, what sort of impact will this sort of an automation have on jobs in the financial services sector?
It will, as with everybody else, it's not that the jobs are going to disappear. So if the job about somebody answering queries, where do I go for putting my fixed deposit, what is my balance, etc., etc. If those jobs go away, you will have jobs in analytics, you will have jobs in changing processes, you will have jobs in sales, you'll have jobs in marketing, you will have jobs in credit. So the composition of jobs will change, but that doesn't take away from the concern that yes, job creation is a concern.
I appreciate your honesty on that front. On investment cycles, Mr. Puri, you sound so optimistic. Economic Times did a survey today of CEOs, 57 CEOs, and they all sound so bullish. But why don't corporates put their money where their mouth is? Why hasn't the investment cycle turned?
The investment cycle will turn when demand exceeds supply. And so we had put in a lot of capacity. I do believe that as we move closer and closer to the 7.5, 7.7, 7.8, private investment will come in. Prior to that, money is dear to everybody. So nobody puts in money unless he thinks he can get enough return.
Few questions on HDFC Bank, Mr. Puri. FY17
Finally.
FY17 solved. I told you, you're doing a fine job of running the bank. I don't see need for you to say that the best is yet to come.
The only reason I'm giving you the interview is if I can sell the bank.
Indeed. So FY17 saw loan book growth slipping to below 20% versus several years of growth of around 24, 25, 21 to 27%. Is below 20% loan book growth the new normal, or do you think as the economy picks up and you yourself sound very optimistic, you could go back to that level?
First point is that my domestic growth was actually 23.7%.
True.
So you didn't analyze it properly, or you were just trying to pinprick me. So the reason it came down below 20% is because the growth on the base, which includes the FCNR,
a huge base, yes.
That FCNR, if you take it away, we actually are having a roaring quarter.
On profit growth, again, for several years, you sort of led the way with greater than 30% growth. And then, of course, now...
this 30% doesn't go away from your head. Now, let me explain this to you.
But just one question, which is that, so obviously in FY17, it dropped to 18%. Is below 20% profit growth the new normal, or are you looking at, or do you think, with the
I don't give guidance. First, let me tell you. No, your estimation of the new normal is incorrect.
Okay.
So that
answers my question to some extent.
To a complete extent. I do presume that banks do not operate in a vacuum. They operate in a GDP environment. 30% was when GDP was 8.5%. To expect 30% at 7% does not in any way mean that the dynamics of HDFC Bank has changed.
Sure.
Our growth will be a multiplier of the GDP. So when we reach 8.5 growth rate, you could see that same. But within that, I do believe that 18% was an aberration. I'm not going to give you guidance into the future, but we did 23 point or whatever in the fourth quarter, and we're looking at a very bright future.
So 18% was an aberration. I think
Yes,
that's
is
something
correct.
that the market would like to take note of. A few more questions before I wrap up. One is on shareholding of HDFC Limited in HDFC Bank. And the reason I ask is that this has been an issue that there's been some back and forth on, and FIIs love your stock. And right now there's limited headroom for them to buy because of HDFC Limited's ownership being classified as foreign holding. In your conversation with Finance Ministry, have you got a feeling that it's something that they're willing to consider at some stage? What's the sense you've had?
Well, you always live on hope. So in my conversation with RBI and the Finance Ministry, I believe there's something, they do say they're willing to consider it. And so we are requesting them to consider it. But fundamentally, I do believe that if HDFC investment in HDFC Life is local, how can HDFC's investment in the bank be foreign? And I also believe that for determining downstream investment, it should be both ownership and control rather than only ownership, because FIIs by definition do not run a business. They come in as investors. So it's something like what happened in the airline, I hope will happen in the banks as well, that you can put a limit on FDI investments. So you can have 100% ownership, foreign ownership in a bank, but the FDI should not exceed maybe say 26%. And the FIIs based on SEBI regulations actually cannot act in concert.
Sure. Two questions on digital, because I know that's something very close to you. You've sort of made a few trips to Silicon Valley, one recently as well, I'm told, to understand the future of payments and financial system. What's your own take on how this is going to evolve in India? Is there space for multiple models to take off, you think?
See, if you look at the payments, payment is only one part of the total financial services infrastructure. So what is required is that people, who are the consumers, should have a convenient and reasonable method to make payments. I think most of the large banks are actually large payment banks by definition. And the charges, despite everything that you come up with, on payments and transfers are probably the lowest in the world, and are so low that anybody trying to break into this space is not going to make money. He's going to lose money. But is there space for a payment bank? Yes. Is there space for a regular bank? Yes. Is there space for a small bank? Yes. Is there a place for somebody wanting to ride on the banking system for free? No.
Has this digital transformation convinced you to buy a mobile phone finally, or not yet?
Now see, that is the other part that I've been trying to convince everybody, that mobile phone has nothing to do with digital. So am I able to work without a mobile phone? The answer is yes. At the same time, am I able to conceive where technology is going by ensuring that my customer needs are met and making sure we use available technology to provide convenience, easy access, best product, best price? I think yes.
Always a pleasure chatting with you, Mr. Puri. Thank you so much for the time.
Thank you
so much.
Thank you.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.